I want to welcome everyone to Stock Talk on July 19th. Now, as you guys know, there was no video yesterday, and I posted it on the Facebook page. PSA, no video today because the trend follows previous videos. Now, I'm changing up the format just a little bit because this, in my opinion, reduces redundancy. And if I talk about a specific trend, for example, if the SPY or SPDR or general market movement continues to move higher, there's little reason to kind of redo that video just to talk about the same thing, especially if the resistance and support lines have not changed, and if it's on a constant uptrend as we have seen last week. Then in my opinion, that video, you can refer back to that if you have any questions, or if you want to talk to me, you guys can get onto Facebook as well. So hopefully you guys like this new format, and let me know if you guys like it through your feedback on YouTube and Facebook. Let's get started right away looking at SPY on the 180-day chart, tracking the general market movement. This is the S&P 500. So the S&P 500 today, let's talk a little bit about intraday, is that we made some candles. You guys can see retesting the support, the near-term support at 279.60. We did bounce off of that. Okay, positive for markets, but we are edging below the 20 EMA or the light blue line, and we managed to close below that. So you guys might be asking, is that significant? So that could be slightly significant, but the one thing I'm looking for is either another bounce off the support at 279.60, a retest and a bounce back up. That is certainly one possibility. What is the other possibility? I'm going to take you guys to the 1 year, 1 day chart. Can you guys see this boxed area representing a gap area that could be filled in the next few days? The gap is from 276.50 to 275.80. Around that area is where we definitely can find some support. So does that mean the markets will come down all the way to that direction? No, right? Because I just gave you two different scenarios. But what is the overall grasp of the market? It's bullish, right? It is on an uptrend. As a matter of fact, the markets can come to the higher low red line and still be bullish. Okay? It's just that we've had this 8 days of, I believe, constant uptrend. We finally took a break today. The markets came down, gave the markets just a little rattle, but perfectly normal in an uptrend condition. Now, this Tuesday, we talked about the scenario in which if we manage to continuously close higher, we could easily get sucked up to the 283.80 to 284 level. That's where we can encounter the next resistance. Are we getting sucked up yet? No, we're still kind of consolidating at the support, perfectly normal. But when that does happen, I don't expect that much resistance in that area, and therefore we can expect that leg up. But for now, there's two scenarios I pointed out to you, the upside and the slightly downside. But all you have to keep in mind if you're playing a long-term trend especially is, this short-term volatility doesn't matter too much because we are on a bullish stretch by the markets. Looking at TVIX, tracking volatility. So volatility, we're looking at the 180-day chart. You guys can see we closed right below the light blue line, showing what? We got rejected at the light blue line intraday today for volatility, and that there's potential for volatility to continue to drop downwards. Sure, if SPY does manage to close below that support level, we do expect volatility to pop a little bit. But ask yourself, are you willing to enter into volatility right now, given where we are? And the answer should be no. It's just way too risky. Sure, you could easily get that 2%, 3% tomorrow, but the overall market's bullish. Why play your chances when there are other tickers that have much more potential? /CL, we're going to take a look at commodities and crude oil futures. Crude oil futures right now found a semi-support, and recall, we're looking at the 1 year chart. The major resistance is 76.50. Okay, that's far away. That's fine. We're not going to talk about that today. But the overall track for crude oil continues to be bullish. And I was looking for an entry at the yellow line, the 150 SMA, to be acting as a support, 65.40. Did we test that area? Have we tested that area yet? And the answer is no. Okay, so you should be asking, well, do we have a reversal pattern? Well, ask yourself, do we have a reversal pattern right now? We have a semi-reversal pattern right now, but this is only a short-term reversal that could play straight to the 20 EMA or the light blue line before that next rejection back to the yellow line, right, guys? So we do see a short-term reversal back to the upside. I do see crude oil having a little more potential, pulling just a tad bit higher before, retesting that 20 EMA line. But overall, I think there could be another leg down for crude oil before we push back up. And that's what I'm seeing. I'm going to show you guys GUSH right now. So GUSH follows oil and gas exploration. So GUSH is one that is actually slightly more interesting because this looks a little like crude oil, but actually sometimes it doesn't look that, doesn't look that kind of one-to-one correlation. And you guys know that it correlates with SPS IOP, right? So here we are. We know that the resistance is at 40.48, and that will continue to act as a resistance in the near future. The one thing we're looking at is I am seeing this tail candle here. Let's take you guys to the 1-year chart. Can you guys see some candles, tail candles over here that's been made? I do like that sign. I do see potential for GUSH. As you guys see, there is certainly potential for GUSH to trend a little bit higher, but just note that the resistance is also pretty close by. All right, let's take a look at /GC. Now, this is one that we've been talking about. I was looking for entry into JNUG or gold. What happened today? We talked about the support so many times, which is why it's great if you guys can refer back to the last video, especially when we talked about commodities, because 1210 was the support we were looking for. What happened when we got to 1210? Well, we didn't get to 1210, we got to 1210.70. Whoops, my bad, missed it by 70 cents, but we were close, right? We found a major support and we bounced straight off of it intraday. You guys can see 1210 and we bounced straight off of it, managed to close near the middle. So what are we looking for in gold? Certainly a very nice reversal pattern today in gold. As a matter of fact, I took a position in JNUG today, but this is just an entry position, just to test the water. But this is a positive sign of how we bounced off, right? Look at the 180 day. Okay, looks all right. I mean, this looks like we bounced off. We kind of got rejected the 20 EMA, but there's certainly potential for this one to pull higher. Let's take a look at the 3-year chart. So 3-year chart, you guys can see that this was a support. Now, do we have a confirmation of a reversal on the weekly chart? And the answer is no. And you guys can see that we don't have much of a confirmation until 2 to 3 weeks later, around 2 weeks later, right? Or at least 1 week right here. We don't have much of a confirmation. But I certainly like the intraday pattern for gold because you guys can see I was eyeing JNUG today, how JNUG reacted to /GC. Did you guys watch this? When we spiked up, we spiked to the resistance level at $13, right? Just a tad but a bit above before we sold off back down. Okay, so JNUG is ready to go up if gold starts recovering. But gold has to be trending up. Otherwise, JNUG won't have the energy to push higher. And that's one that I was really interested in. I'll continue to monitor in the next few days. /NG, natural gas, another interesting trend following the inventory reports that came out today. Here's the 180-day chart, light blue line, resistance, rejection, 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 rejection. Okay, we popped above. Now, I like this trend for natural gas, number one. We are at a near-term support, number two. However, I need a couple of days for natural gas to confirm the 20 EMA line or the near-term support as an actual support. I still don't feel strongly enough that natural gas is just going to zoom back up and we're done going down. I need some more evidence, especially on a daily basis. So this is one that I'm waiting. I'm just not convinced that this is on a reversal pattern just yet. It's kind of similar to gold. I like the intraday play, but on the 180-day, 1 year, and the 3-year charts, as you guys can see, it doesn't look too enticing. It's enticing for me to put in an entry position, but it's not enticing enough for me to start putting more of that position. We will talk about entry positions and how much capital to allocate in these positions in my course that's being developed. So I'm going to take a moment just to thank everyone for watching these videos, and be sure to hit that like button if you guys do find these videos helpful and beneficial. I do it for you guys, and I have a lot of fun. Like I always say this, but I have a lot of fun doing these videos for you guys. And the reason I kind of want to reduce the amount of stock talks is just to promote less redundancy. You guys can look at the analysis, look at how accurate the analysis are, you know, in a better sense if there's no big change or no big movements. And yeah, hopefully that will help you guys in the long term. Take a look at the Facebook tickers that you guys submitted. The first one was IQ. Now, IQ has a very well-defined resistance. Can you guys imagine why this was the resistance up here? 37.75, around that area. Look, it acted as a resistance here. Why were we not able to close above this area before coming back down? Well, that was a resistance area, right, guys? And therefore, we expect 37.50, 37.80 to act as a resistance here. It acted as a resistance this time around, and now we are actively closing back to the red 200 SMA line. Act as a support here. Act as a support here. Now, is it going to act as a support here? We don't know for sure because it's an on and active downtrend. You know, the market, it was actively going down today, and since this one goes up 9% one day, 9% another day, you don't want to be taking a chance even though we're at the 200 moving average, right? Because one can easily argue that we ran out of time in the market today and just happened to close at this area, right? So one thing to note is I want to see at least one day, at least a half day, but in the minimum, I feel like a 1 day of consolidation at the 200 SMA line before potentially taking that position. But here, one thing to note is we are on an ascending triangle position, and that the potential for profit, even though this one does move, you know, pretty quickly, is getting lesser and lesser given that earnings is coming up in 1.5 weeks. And certainly, this is not one that I would be looking to, you know, guess on earnings. It could go up high, it could go down a lot. It just depends a lot on where we are before earnings occur. Where does it close? Where do we start closing on these 2 days before earnings occur? And at that point, it'll be more interesting. It'll tell a more interesting story. But I could still easily see earnings making a push down back to the support before another massive kind of surge back up to the upside the next day. Can be very confusing for many people. And remember, the market's job is to what? Is actually to make you lose that money, okay? It's to make you make the wrong decisions. And that could be the trick behind the earnings. So just be careful on this one. All right, let's Tango. Welcome. Thank you for your comment on YouTube. I'm going to take a look at DEC, and DEC has a resistance at 122.18. All right. Look how we've kind of formed a semi-rejection candle intraday today, and that there's a potential for it to come down. Given that earnings is just a couple days away, we are very overextended, nearing the resistance. Certainly not one to go into. We're looking at the 180-day chart. I'll show you guys the 1 year chart, right? Look how overextended we are. My goodness, I could see another potential bear flag pattern, or yeah, bear flag, bull flag pattern forming. You guys can see this bull flag formation before we popped up, bull flag formation before another possible pop up. But we are really, really overextended over the moving averages, and I need this one to start consolidating. All right. Travis, VSH. So here's VSH, and this one, earnings coming out in August. So this is one that has been constantly moving on an uptrend, but this is one to be very cautious about. Look at this. We're overextended once again, similar to the previous pattern. And what happened near earnings? Look at here. Earnings. overextended. Before, a couple of days before the earnings, we had a massive surge, sell off, sell off, sell off, and then boom, gap down on earnings and went lower before we recovered, right? So what's the moral of the story? The moral of the story is, once again, do not buy on the high, right? And traders, I feel like over and over again fall into this trap. It's going higher, we have to buy. No, never catch a train once it's already left, right? If it's left and it's already taken off for a while, especially don't catch that, because by that time it's going to come back and bring you back to where you originally were or lower. So just be careful on that. The last one we're going to be tackling is by Karar. Previously, you spoke about MU. I got in about 2 days ago. Pattern seemed pretty bullish. What would be a reasonable resistance? So MU actually came down 2.2% today. And you guys can see a couple of things. I hope you guys can see this. Right now, with MU, we know that our entry points are at the support. Now, the support is around $52 to around $51. That's the support. Note that we consolidated for a period of time, a very important period of time, and we went up for a period of time before now coming back down to the light blue line of the 20 EMA. Now, your question was, where's the resistance? Well, if you're looking at the short-term resistance, yes, it's around $61. But chances are this one has a good chance to continue higher, in my opinion, of course. And I'm looking at a resistance around $65. That is where I'm looking for an exit off of MU. Of course, if there's a potential for it to come down back to the support and retest the support, certainly possible for this one. But just given that we've had not a very long time consolidating down here, and I just feel like this one has the potential for it to come down again, providing what? Providing great entry positions once again for those who were not able to go in the first time. But of course, if it goes up, that's great. If it kind of trends back higher, that's perfectly normal as well. But I just feel like this one certainly has potential, as this one, right, was the stock to watch for the month of July. So thank you everyone for all of your ticker submissions. This is all I'm covering today, just to kind of make the video short. Hope you guys like this video, and please give me a thumbs up if you guys like this video. If you didn't like this video, hope you like it in the future, and I'll see you guys on Sunday for another stock talk. And please let me know if you have any questions on the Facebook chat as well. All right, I'll see you guys later, and happy trading on Friday.